Mistakes are costly now. It is a much more unforgiving market in 2023. The interest rates rising, along with home prices still being fairly high, has made return on investment dwindle. And it's those same markets that went up extremely quickly that are seeing the largest declines now that pricing has started to come down in some markets. If you are looking for new ways or alternative ways to find increasing ROIs in today's market, then stick with me because we're going to talk about just that. What's going on, everybody? Henry Washington here with BiggerPockets. As always, we appreciate you being here. If you love great real estate content, please click the like button, subscribe to this channel. We want to keep sharing great content like this with you. If you've got some nifty tips or tricks or cool strategies you're doing right now in this crazy market to increase your ROI, share them in the comments. We would all love to learn from everybody doing this right now. Now, before we get into this, let's hear from our friends at Rein. Did you know real estate has outperformed the S&P 500 for over the last 20 years? But most people assume they can't get into real estate without a ton of time, money, or experience. With Rein, anyone can invest in real estate with as little as $100. You can browse highly vetted long-term and vacation rental properties, invest anywhere from $100 to $50,000 per property in just a few clicks, then sit back and collect a return. Backed by Jeff Bezos, Arrived brings real estate investing to the masses. So what are you waiting for? Head to arrived.com to become a property investor today. All right, here are 4 ways you can increase your ROI in today's market. The first is probably one I'm going to get some eye rolls about, but I couldn't be more passionate about making sure we get this message across. You need to be investing in your real estate education. When I say investing, that doesn't always mean money. It can mean investing your time. You just need to be focused on making sure you truly educate yourself on the strategies that you want to employ in this current market. It is a much more unforgiving market in 2023. Mistakes are costly now. 2 years ago, if you made a mistake, the market was so forgiving because values were increasing so rapidly. As long as you held that property for a little bit of time, it was probably worth more than you planned on it being worth within a few months. And so your mistakes would get absorbed by the market because the value was now higher. The market is no longer like that. And if you make a mistake, it can and will cost you money. I think your education is a huge factor into you increasing your return on investment in 2023. All right, the second strategy to consider when looking to increase your ROI is location. We all know that location is one of the major factors that play into having a good real estate investment. We also know that having a property in the wrong location can kill your real estate investment. But we're not just talking about location in terms of finding the most popular area of town to buy a property. What I'm talking about is leveraging what's happened previously in the market to help us buy property in historically good locations at a cheaper price. An example of that is we all know that when the real estate boom happened between 2020 and 2022, that there were several markets, super popular markets that historically have gone up in value that went up super fast. Like they hockey sticked in the upward direction in terms of value. And it's those same markets that went up extremely quickly that are seeing the largest declines now that pricing has started to come down in some markets. You can use that information to your advantage to look for property in those more popular markets that are typically more expensive markets that may be at a discount now. So you can look at places like Phoenix, Arizona, San Diego, California, Austin, Texas, Denver, Colorado. Do some research, find the markets where values have come down in very popular markets or populated markets and look for discounted properties. Hold those properties for the long term, and hopefully you will see that fantastic return on investment that you're looking for. All right, the third strategy to increase ROI is leverage. When I say leverage, what I'm truly talking about is borrowing most, if not all of the money to purchase your asset. That can be borrowing it from a bank, from a hard money lender, from a line of credit. Using other people's money is a strategy people have been using for ages to invest in real estate and get a high return on your investment. There are risks to this strategy. If you're going to leverage or borrow money from anywhere, you have to be certain that you are buying a good deal. You have to be certain that there is lots of equity in that deal for you to be able to pivot if your strategy doesn't work. If something changes and you have to switch directions, you need to be able to have a cushion to exit that property without having to cost you lots of money, because borrowing the money still means you have to pay it back. And what you're hoping for is you borrow the money, you invest in the asset, you force the appreciation, or you wait long enough and the market appreciates, and then you can pay off the investors. Educate yourself on the method that you're going to be using and make sure you have an alternative method or an alternative strategy that you can pivot to that may either also produce income or allow you to exit that property and pay off your investors, or else you could find yourself in a world of hurt. Tip number 4 is to consider alternative strategies, something like midterm rentals or rent by the room, as a way to maximize your ROI. You can leverage different platforms and list your property as either a midterm rental, which means it's a 30-day stay or more, or a rent by the room strategy. There are several platforms that offer managing rentals by the room. What these strategies do are they increase the cash flow that you can receive from a single family home. This doesn't come without a downside or a risk. And the downside to these strategies are they're typically going to be a lot more management intensive, meaning you're going to have to either spend a lot more time managing these properties. With a midterm rental, you're still providing somewhat of an experience. It's like being in the hospitality industry. And with a rent by the room, well, now you have multiple tenants for one property. And so you're managing a single, like a multifamily, and that can be much more management intensive. There are going to be different types of headaches that come with managing these types of strategies. Be prepared to either spend more time managing these assets or to spend more money to pay a professional to manage these assets. Because they're so much more labor intensive, the management percentage that companies require is typically higher than just a standard long-term rental. There you go, folks. I hope we gave you some helpful information to help you think about how to increase your return on investment given today's current market environments. You have to remember that real estate investing is a long-term game. Yes, there are ways to make money in the short term, but with the market conditions and things being not as easy to do that in this market, you have to be more prepared than ever to hold on to your properties for a longer period of time. You're hoping that interest rates come down or buyer demand goes up. And when those things happen, your properties will start to appreciate again. Your ROI will go up. It just could take some time. So don't quit if you're not seeing those returns right away. If you can buy a property at a good price point or at a deeper discount, that gives you more room to be able to hold on to that property. And I promise you, in the long term, you will be so glad that you invested in real estate now instead of waiting on the sidelines for things to change right away. Thank you so much for joining us. As always, if you enjoyed this video, please like it. If you want to see more content like this, subscribe to the channel. If you want to learn more from me and how I teach real estate investing, you can give me a follow. I am at the Henry Washington on Instagram. Thank you so much for spending your time with us. I hope we added great value to you. And as always, I will see you at the closing table.